Let's talk volatility and let's talk the Q1 framework with Cem Karsan back with us here in studio. He's a senior managing partner at Kai Volatility Advisors. Welcome back, Cem.
Good to be here.
All right, going back to our last conversation a month ago, there are a few big takeaways from me then. One was that you said a vol bottom would be coming within the next 10 days or week or so. It basically turned out to be that day if you look at VIX, but I know you measure volatility a little bit differently.
Yeah, on a fixed strike basis, it's really livened up lately. Been a massive amount of vol buying across the board. VIX calls, 300,000 of them traded a couple days ago in the February contract, not far from at the money here. On top of that, massive vertical put spreads in the S&P, a bunch of cash spreads that are institutional coming out in Vega and the longer term, 3, 4, 5, 9 months out even. So that's giving a bottom to vol, right?
Okay.
And it makes sense given the environment. People who get it see that the supply of vol and the supportive flows are waning out. Now, that doesn't mean we're going to decline today, tomorrow. That means the window is open now, and the supply and demand, which is what we're always looking at, is starting to become imbalanced. Right? And all of that demand that we've seen for stocks, structural demand, is now going away.
Yeah, this is basically the day, I think last month, you told us that this is when you want to start thinking about getting short, basically.
Yeah, Jan 17th I circled, which was yesterday. We had a nice decline, bounce back. There's still this charm in the market, right? This underlying bid that comes from the decay. Most of the VAN is out, but the window is open, right? We're getting out of these supportive flows. It's interesting, right, that you see the NASDAQ performing so well in this last week or so.
Yeah. Well, today particularly.
Today particularly, yesterday wasn't great, but the days before too. If you look at the last week and a half, really, it's been quite robust. Why is that? We highlighted before that January is the biggest options expiration for single list stocks. It's not for the index. December and these quarterly are the biggest for the indexes. So where is the majority of that open interest? Big tech. Right? And so you see the supportive flows going into options expiration, even though the flows are broadly weak otherwise.
So the single stock power, when it's concentrated in tech, is overwhelming, basically.
Correct. There's a lot of narratives otherwise to why that the NASDAQ is up today.
Hey, these chip maker reports are pretty charming.
That doesn't hurt as well, I like the pun, but yes, the structural supply and demand imbalance should come to an end on Friday. So I would be careful chasing this tech up here, in particular, if we do see some weakness going forward, like we've been talking about.
So you believe that the flows that you watch, those forces, those currents of volatility, the buying and selling of all that stuff, all the terms, that will still take that will still take priority over the narrative around AI, which has got TSM blasting off, AMD blasting off.
Yes, so structurally, right, there are major issues. The Fed's in the box. Equities broadly should do poorly. If we are seeing this continued amount of issuance, which we will, right? In particular, I think that the biggest issue to highlight from a macro point is the reverse repo bleeding out and the lack of supply and demand in the treasury market and what that means broadly. Unless the Fed comes to the rescue, you saw some clues from several people last week, right, on the board that they might be ending QT to help meet that supply. But until they do, there's a problem out there. There's a liquidity imbalance, and that's from a macro perspective. And we no longer have those flows, structural flows at the end of the year to come meet that supply. And that's the big picture, right? Now the question is, are there other things structurally that can, is knowledge vol dampening enough, right? We've been talking about this for 2.5 months, circling this on a calendar. Other people are watching. 1, 2, there's a massive amount of Veda out here for the next for the next week or so. This is what we've been seeing that is holding vol at bay. What is Veda? Veda is the decay of time of vol. So we are getting the expiration in January is a very high, expensive vol that people can sell, dealers can sell, to own something very cheap behind it. So they are all decaying longer vol as this options expiration goes by. That vol supply is allowing them to counter all the demand for vol that we've been seeing otherwise. Now, once you get past next week, that's no longer there. And the question is that supply of vol paired with the knowledge and people that are watching this enough, right, to let us skate for another month? I'll highlight that in 2020, right, we saw a continued rally despite a lot of the bad evidence that we've seen that ended on February OPEX, the day after February expiration. the decline of 30% that we saw in 2020 ended the day after March OPEX. Not enough people talk about it. We've highlighted on here before. That decline was structural and a function of flows. Yes, there was a macro reality, but we knew about that late December, early January. The rally continued and vol compression continued till that Feb OPEX. Why is that OPEX important? Because March OPEX is a big quarterly OPEX with lots of open interest, much like the December and June and September. That is a dangerous OPEX, right? That is a place volatility can really become unpinned and people can be off sides. I think you start planning for that now, right? That can be front run in this expiration like we've talked about. The window is now open. But if we push through this window through the end of the month, February 2nd or so, you need to be constructive into what's probably a last rally before a decline.
So if we don't start rolling over soon, then by the end of this month, which puts us about a week and a half.
You have a very tight week and a half to 2 week window here for things to get going to the downside.
Okay.
Before you start getting that Veda coming back and Voma Charm from the February expiration, that is not as big as the January. It's not concentrated in single list tech. It's more index.
Okay.
Can that counter the lack of positive flows and the vol buying and some of the macro liquidity issues? It'll be difficult. You might see kind of a bouncing chop back and forth.
Okay.
But again, you have a window here. If it doesn't happen here, you got to push for a couple weeks during that otherwise constructive positive period.
Because then basically your next shot is March?
Your next shot is February.
February.
Okay. February 14th, Valentine's Day Massacre. we'll label it here, right?
That one's easy to remember.
Yeah.
So it sounds like, if I'm interpreting some of this right, you had very high conviction last time that Jan 17th basically, and going into that, start to get long vol prepared for rollover. It sounds like it was a little bit lower conviction that we're going to roll over right now.
No lack of conviction. I was very clear, and I've been very clear. The window opens on January 17th.
Right.
People read that as, oh no, we're declining. The world's going to crash January 17th. I've said be very constructive since November 1st to January 17th.
Okay.
January 17th, You have to start watching the flows and be more attentive. You cannot be risk on. You have to be very attentive to the flows. That does not mean we're crashing today. A crash is always a sub 1% probability. If it goes to 5%, that doesn't mean you bet on that crash, right? All in, right?
Okay.
That means you have to be elevated risk, ready to hedge, prepared for what might come. You also have to be watching those flows in the windows that matter. You have to be very thoughtful during this time. We were risk on for 3 months essentially. Now, you have to sit and be very careful and watchful of these windows. In particular, I would continue. I highlighted tech. Tech has been strong here. I would start to fade that on Friday at post OPEX. That is the place to look for the short going forward. I would also like to highlight that February to March OPEX is that last window, but also probably the most probable because of the risk of the March OPEX. If we get past that window, then you have to be more constructive broadly. The other thing I would say from a macro perspective, liquidity does matter now. That is the risk, right? That the amount of treasury issuance and the liquidity draw, particularly in election year where there's going to be more and more spending, does not have enough liquidity to meet it. We had this cushion in reverse repo to help absorb that. That cushion is now depleted and coming to an end. That imbalance is very important and dangerous for the market from a liquidity perspective. And if the Fed does come in and find another facility before a decline or find a way to counter that liquidity, you have to be attentive to that. You cannot ignore that macro.
You think they might stop QT and do something?
There have been hints already. There have been some hints already. I think they will. The question is, will they do it proactively or will they wait for the market to force their hand? And my guess is that they will wait for the market to force their hand.
Through what, a big sell-off or something?
A big sell-off of some kind here in Q1.
Okay. The other thing last time you talked about your view for the 10-year, which you think would get back above 5% at this point this year.
Yeah,
at some point.
Not this point,
no,
by the end of the year, to be clear. Yeah, absolutely. I still believe the amount of issuance that's out there, particularly in election year, particularly now that people are offside and calling for the deflationary environment, we've already seen clues to that the economy is not as weak as maybe people thought. Inflation came out hot, unemployment came out hot, right? There are underlying signs of the same, we call this transitory 3.0, right? Here it comes again, right? The inflation is structural. We've been talking about it for 3 years. It's structural. The Fed will continue to kind of ignore this, but there is a structural demand that is coming, that is not cyclical, right? That is not a function of the business cycle. It's a function of taking money from the rich and bring it to the poor. Labor rights coming, deglobalization and protectionism, all of those things are structurally inflationary. They have very little to do with the cyclical forces of the business cycle. And those are the things that are going to continue to keep inflation hot and keep the Fed in a box.
All right, that's the big call up macro-wise 5% this year. The short term to come back to the process of the volatility rising as stocks have held firm. If last time you were here a month ago and you said vol's going to bottom, get long vol, that trade worked so far. Do I hold on to that trade then right now? When do I know if the window has closed and we're not going to get that higher vol pop?
Vol is cheap enough when you go out 2-3 months, particularly on the call side, so that into a rally particularly, that it should continue to be relatively bid.
Okay.
That doesn't mean go own 1 month vol, because that is more uncertain here, right? You will experience a lot of decay if the decline doesn't happen until February, right? There is still theta to be had, right? Potentially if this market doesn't decline now and pushes to Feb. That said, Vega vol is cheap, and the structural flows that are supportive of the market and supplying to vol have now passed, and it is a time to structurally be long of vol.
All right, so start to prepare, but don't put all the chips on the table until it's clear we're slipping in this window.
Not all Vega is created equal. Doesn't mean go buy whatever option you feel like. The point is there are cheap options out there, longer dated, that have less decay to them and that are better bets once you start looking at a decline being likely or probable in the next couple of months.
Okay, all right, well, we'll be watching then for the next couple of weeks here to see if the window develops into a pit, right?
Trap door, right?
All right.
Otherwise, massacre on February 14th. On Valentine's.
Okay, all right, well, that one's definitely an easy one to remember. All right, thanks, Cem. Appreciate
Great
the
being here.
latest. Cem Karsan, Kai Volatility Advisors.